Hello and welcome back to the QuantScore Financial Show, brought to you by Maticians, your go-to source for cutting-edge market analysis and data-driven investing insights. Whether you're a seasoned trader, a curious investor, or just someone who wants to understand the numbers behind the headlines, you're in the right place. Before we dive into the nitty-gritty of this week's stock analysis, I must be absolutely crystal clear about something incredibly important. The information I'm about to share with you is for educational and informational purposes only. It is most certainly not financial advice. I'm not a financial advisor, and this video is not a recommendation to buy, sell, or hold any of the securities we will be discussing. Investing in the stock market carries significant risk, including the potential loss of your entire investment. The past performance of any stock is never a guarantee of its future results, so you must always be cautious. My goal here is to demystify some of the numbers and tools that analysts use to look at the market. We're going to explore a quantitative model, which we're calling QuantScore, to see how an algorithm might interpret a company's financial health. This is an exercise in understanding data, not a set of instructions for your money. Think of it as learning how a car engine works. It doesn't mean you should immediately start building one yourself. The stock market is a complex and often unpredictable beast, and making decisions requires careful personal consideration of your own financial situation, your risk tolerance, and your long-term goals. The analysis we are conducting is for the trading week beginning Monday, September 29th, 2025. Market conditions can change in the blink of an eye due to economic news, geopolitical events, and company-specific announcements. Therefore, the data presented here, which is based on the market's close on Friday, September 26, 2025, is a snapshot in time. It's a starting point for further research, not an endpoint for decision-making. Always do your own thorough research, or better yet, consult with a qualified independent financial advisor who can help you navigate these tricky waters and make our choices that are right for you. So with that very serious but necessary warning out of the way, let's get ready to pull back the curtain. We'll be looking at a collection of stocks that our hypothetical QuantScore model has flagged as either potentially undervalued or potentially overvalued. The aim is to empower you with knowledge so you can better understand the language of the market. Let's begin our educational journey into the world of quantitative stock analysis and see what the data might be telling us this week. Sometimes the same tickers appear for weeks. That's a feature of consistent data, not a bug. If core metrics barely change, the classification often won't either. We trial a gentle recency penalty to broaden candidates without ignoring truly persistent signals. This keeps the analysis fresh while preserving educational continuity. When a name repeats, we ask, has the price moved? Have forecasts updated? Has any material news that may shift sentiment? Recurring tickers become real-time case studies in how sentiment and fundamentals can diverge. With that in mind, a brief primer, then let us get started with this week's stocks. Sincerest apologies, but our last quick note. QuantScore compares companies on valuation, profitability, and growth at scale. We'll cite price-to-earnings growth and forward price-to-earnings, return on assets and return on equity, quarterly earnings and revenue growth. And lastly, our infamous QuantScore. A low PEG ratio can strongly hint toward undervaluation, where, alternatively, a very high PEG can flag stretched price versus growth. Our algorithmic prediction models strip out unwanted emotional bias. They test if price looks justified by the numbers. These are not recommendations, just structured case studies for your own research. Let's begin with 5 companies that model currently flags as potentially undervalued. To begin our undervalued list, we start with United Parcel Service, Inc., ticker symbol UPS. Closing the trading day, Friday at $83.72, totaling a market cap of $71.11 billion. UPS trades in the industrial sector, working specifically in integrated freight and logistics. They currently trade at a price-to-earnings growth ratio of 1.22, with a forward price-to-earnings of 11.24. With a return on assets of 6.9% and a return on equity of 34.9%, United Parcel Service delivers stunning financials all across the road. Sadly, UPS saw a dip in their quarterly income metrics. with quarterly earnings down 8.3% and quarterly revenue down 2.7%. Even with a dip in quarterly numbers, UPS still managed to make the first spot on our undervalued list this week, starting the list off with a quant score of 19. Next up on our undervalued list for the market trading week beginning September 29th, 2025, we have Regeneron Pharmaceuticals, Inc., ticker symbol REGN. Most recently priced at $563.90, they currently have a market cap of $61.15 billion. Regeneron trades in the healthcare sector within the biotechnology industry. Currently, they trade at a PEG ratio of 1.11. With a strong forward price to earnings of 14.88, Regeneron posted an ROA of 6.66% and an ROE of 15.3%. They saw an increase in their quarterly financials as well, with earnings up 3.2% and revenue up 3.6%. All of these metrics help to value Regeneron at a weekly undervalued quant score of 27. Third up on our list of undervalued stocks this week, we have Dow Inc., ticker symbol DOW. Dow closed the trading week priced at $22.96, totaling a market cap of $15.74 billion. Dow trades in the basic materials sector, working in the chemicals industry. They trade at an incredible PEG ratio of 0.54 and a forward PE just as amazing at 13.61. With quarterly earnings down 28.6% and quarterly revenue down 7.4%, we definitely have to blame or thank our algorithms black box for giving Dow an undervalued quant score of 32 this week. Next up on our list, we have Supermicrocomputer Inc., ticker symbol SMCI, closing the trading week at a price of $45.82 for a market cap of $27.48 billion. SMCI trades in the technology sector within the computer hardware industry. Thankfully, they have seen some amazing headway from the exponential growth Nvidia has seen over the past couple years. Supermicrocomputer has remarkable financials, currently trading at a PEG ratio of 0.76 and a forward PE of 17.92. Combined with an ROA of 6.57% and an ROE of 17.9%, it is clear to see how they made it so high on our undervalued list. Unfortunately, glory was shouted too soon because SMCI saw a decrease in quarterly earnings of 31.4%, but was able to somewhat justify it with a quarterly revenue increase of 7.5%, giving them the drive to reach a quant score of 40 this week. And to finalize our normal undervalued stock list this week, we have UiPath Inc., ticker symbol PATH, priced at $11.87 with a market cap at $6.45 billion. UiPath works in the technology sector in the infrastructure software industry, riding the electric waves of artificial intelligence and advanced automation. They trade at a shocking PEG ratio of 0.53 and a forward PE of 18.42. UiPath saw a spike in their quarterly financials, with quarterly earnings up 60.4% and quarterly revenue up 14.4%. With incredible metrics across their company, UiPath led the charge for our normal undervalued stocks, reaching a weekly quant score of 42. Now for an undervalued wrap-up. We discussed United Parcel Service, Regeneron, Dow, Supermicrocomputer, and UiPath. None of this information should immediately signal a buy alarm. Just an educational watch list to keep track of. Now, we have our 5 companies where valuation looks ahead of fundamentals according to our prediction model. To start our normal overvalued list, we have Brookfield Asset Management Inc., ticker symbol BAM. At a current price of $58.09, Brookfield has a market cap $95.79 billion. They work in the financial services sector and, as their name suggests, work in the asset management industry. Currently, Brookfield has a sky-high PEG ratio of 4.84 and a much better forward PE of 25.84. Brookfield posted an ROA 11%, an ROE of 20.8%, combined with strong quarterly metrics with earnings up 18.3% and revenue up 19%. All of this brings Brookfield to a weekly quant score of 22. Next on our overvalued list this week, we have Full Truck Alliance Company Limited ADR, ticker symbol YMM. They trade at a price of $13.05, totaling a market cap $13.61 billion. Full Truck works in the technology sector, specifically in the software application industry, providing a global digital freight platform for their clients. Their PEG ratio is noted as negative or not factorable due to a negative forward outlook, but their forward PE of 19.49 is nothing to scoff at. Other than their PEG ratio, Full Truck's financials are strong, making us slightly question their place on this list. With an ROA of 6% and an ROE of 11%, returns are reasonable to solid. Quarterly metrics were strong as well, with quarterly earnings up 51.1% and quarterly revenue up 17.2%. Regardless of their better-than-average financial metrics, our algorithms still have Full Truck Alliance at an overvalued quant score of 24. Third up this week, on our overvalued stocks list, we have Woodward Inc., ticker symbol WWD. Woodward closed the trading week at a price of $249.09, totaling a market cap of $14.63 billion. Woodward Inc. works in the industrials sector, specifically working in the aerospace and defense sector, responsible for the design, manufacturing and maintenance of all aspects of control systems for engines, turbines and industrial equipment. They trade at respectable earnings metrics with a reasonable PEG ratio of 1.97 and a forward PE of 29.5. Another company on our overvalued list with stellar financial metrics. Our algorithms definitely have a better sense of the market than we personally do. Woodward currently has an ROA and an ROE of approximately 6% and 17% respectively. Quarterly earnings and quarterly revenue were both up as well, both increasing 8%. All of these details and much more provided the information our algorithms needed to provide Woodward with an overvalued quant score of 25. Next up, we have Welltower Inc., ticker symbol WELL, priced at the time of filming at $174.90, with an associated market cap of $114.84 billion. Welltower operates in the real estate sector, specifically as a real estate investment trust for residential wellness and healthcare infrastructure. With our coverage of many trades made by members of Congress, we wanted to mention that Welltower has been a consistent investment of Democratic representative from California, Congressman Ro Khanna. He has not added to his position since the end of 2025, but was a consistent investor prior. Welltower trades at a high PEG ratio of 3.62 and a forward PE just as bad at 66.23. Their return on assets is a measly 1.92%, while their return on equity is at 3.45%. They saw a small jump in quarterly earnings, up 7.4%, but Welltower crushed quarterly revenue, up 39.6%. All of Welltower's metrics help our algorithms reach a quant score of 27. Last up on our normal list of overvalued stocks for the trading week, beginning September 29th, 2025, we have a new favorite to the channel, TKO Group Holdings Inc., ticker symbol TKO, and parent company behind the global mixed martial arts leader, the Ultimate Fighting Championship. TKO went into the weekend priced at $199.04 for a total market cap of $16.08 billion. TKO works in the communication services sector, specifically in the entertainment industry, continually hosting some of the biggest events in numerous arena and event center history. With that said, the financial facts do not change, and our algorithms are screaming overvalued. TKO currently trades at a forward PE of 41.67 with a PEG ratio available due to negative or unpredicted future outlook. The ROA for the company currently stands at 2.62%, while ROE is 6.67%. TKO has continued global expansion and growth, with their quarterly metrics proving that, with earnings up 62.7% and revenue up 9.7%. Our algorithms took all necessary details into account, providing TKO Group Holdings our top normal overvalued quant score for the week at 34. To wrap up our overvalued list, we had Brookfield Asset Management, Full Truck Alliance Company, Woodward Inc., Welltower Inc., and TKO Group Holdings Inc. High valuations relative to measured performance. Next, as our treat for making it to this point in the video, we have our weekly outliers, 2 undervalued from the same sector and 2 overvalued repeats from last week. These are stocks that had metrics or algorithmic values that we felt could not be accurately justified to include with our normal choices, for some reason or another. First up, we have two undervalued outliers, both in consumer cyclical sector, specialized as auto manufacturers. The first auto manufacturer, we have Rivian Automotive Inc., ticker symbol RIVN, recently priced at $15.59 with a market cap of $19.1 billion. The following detail should be easy justification on why Rivian could not be included in our normal list of undervalued stocks. Due to negative metrics, Rivian currently has an unquantifiable PEG ratio and forward PE ratio. Additionally, they currently have an ROA of negative 14.5% and an ROE of negative 54.3%. Quarterly earnings were flat, but we did see a slight increase in quarterly revenue, up 12.5%. None of this is nearly enough to explain an undervalued quant score of 76. The other undervalued outlier from the same industry, we have Lucid Group Inc., ticker symbol LCID. Lucid is priced at $23.96 for a market cap of $7.08 billion. Similarly to Rivian, Lucid currently has a PEG ratio and forward PE ratio that are both unavailable due to a lack of positive financial metrics. ROA and ROE for the company are both negative, with quarterly earnings flat. They have seen an improvement in quarterly revenue, up 29.3%. We cannot fully quantify why, but Lucid received our top undervalued spot for the week, regardless of outlier status, for a total quant score this week of 79. Same sector flags suggest the market may be overly pessimistic on select auto names despite revenue traction. Lastly, we are discussing our same two overvalued outliers from last week. We typically try not to have too many duplicates week after week, but there are certain companies with valuations that simply do not make sense. First, Robinhood Markets Inc., ticker symbol HOOD. They finished the Friday trading hours at a price of $121.78, equating to a market cap of $109 billion. PEG ratio for Robinhood is unavailable due to financial metrics, but they are trading at a forward price to earnings of 59.52. As for the rest of the metrics for Robinhood, they have been on an absolute rampage, with an ROA of 4.66%, an ROE of 23.5%, quarterly earnings up 100%, and quarterly revenue up 45% as well. Although these metrics seem to argue otherwise, Robinhood comes in at our second highest overvalued quant score this week, at 48. And to finalize this week's algorithmic stock picks, we have Palantir Technologies Inc., ticker symbol PLTR, price at $177.57, totaling a market cap of $425.98 billion. Palantir current trades at a PEG ratio of 3.47 with a forward PE just as bad at 208.33. They have a return on assets of 5.67% and a return on equity of 15.2%. Palantir destroyed quarterly earnings, up 116.7%, with quarterly revenue acting as no slouch either, up a respectable 48%. All this to say, Palantir retains their top overvalued spot with a quant score this week of 49. Their persistence underscores strong momentum, yet valuations the model deems stretched. Outliers teach us where sentiment can outrun or underrate the data. We've walked through 5 undervalued stocks, 5 overvalued stocks, and 4 outliers for the week of Monday, September 28, 2025. These are research starting points. Tools to build your financial literacy, not instructions to trade. Cross-check everything in current filing. Markets are constantly moving and change faster than we can comprehend at times. Be careful with your money, make informed decisions, and never invest more than you can afford to lose. My main mission is to make you richer in financial and stock market knowledge. That concludes our QuantScore analysis for the week beginning Monday, September 15th, 2025. Thank you for watching another episode of the QuantScore Financial Show here on Maticians. If you found this analysis helpful, please give this video a like. Don't forget to subscribe and hit the notification bell for our weekly algorithmic stock analysis. Remember, this is educational content only and not financial advice. Thanks again, and until next time, stay calculating, my friends.